Hello, everyone. Welcome to this live webinar. Thank you for joining my Wave webinar, Elliott Waves, of course. Specifically, we're going to dive into some examples how to see and trade Elliott Waves in more detail. We did that last time around, but promised to do that more intensively in this webinar, as far as I remember. So here we are. We're going to tackle that, translating waves into actual trading ideas. Not only waves, but basically price swings and how we can use moving averages, fibs, and fractals for specifically for trading as well, for trading ideas. Okay, so when traders will look at Elliott waves, they often see it as a complex and difficult process, and certainly it's not an easy thing, but it helps a lot with forecasting and predicting what's going to happen, and is therefore very flexible in staying in tune with the market. So if you use a very rigid approach, which is based maybe on a couple of indicators, eventually the system might not work as well because it's just a kind of a lucky combination of indicators that worked well for a while but might not work well later on. With Elliott Wave, you have, I think, more capabilities to understand the structure of the chart and understand the chart, and therefore be able to change your trading plan and accordingly to how the market is moving. Now, it's not as easy as I make it sound. That's why I advocate a kind of a more practical way of trading waves, because Elliott waves is complicated, and if you only base your trading ideas on Elliott waves, that could take a lot of time to learn, and it could take a lot of experience, and I therefore not recommend that. But if you if you use the tools that I use, like moving averages, fibs, and fractals, then it goes way quicker. It's more rules based. It's more it's less prone to errors, and I think it's just easier all in all to learn how to understand that. So that's all of that I explained in my Elliott wave course. It's actually more of a pattern course, a course that explains patterns, price swings, and how to understand the charts with fibs, moving averages, and fractals. But by doing so, you also understand the waves if you want it. It's not a must. That's kind of the beauty of that course. And it has 22 plus hours of videos, 70 plus videos. It has a 600-page ebook. It has all the indicator strategies, template, education. It's really very robust. It gives you a lot of in-depth knowledge, I think. So definitely worth trying out. But yeah, this is a free webinar just to give you some, insight into how that course looks like. And of course, if you want to be a member, you can do that anytime. Feel free to reach out. By the way, before I dive into the Elliott Wave topic of today, wanted to let you know that this is based. There's a special special sponsorship actually from a broker called Monfex, and you can check it out on our website. And if you open an account with them through us, you get the ECS Live 6 months. You just need to, of course, besides opening the account, you need to fund the account and start trading the account, and then you can get access to ECS Live for 6 months. For free basically, or get a hefty discount on ZUCA or LOAEA minus 40 or minus 50%. But be aware that this offer, this sponsorship, is only valid for, I think, residents, as far as I understood, from these countries mentioned at the bottom: UK, Spain, Colombia, Chile, Panama, and GCC countries. Okay, so that might be for you. Check it out. Otherwise, let's move on and take a look at the topic of today. I need to open my screen though for that. There we go. So, how to translate those trading ideas? Okay, so, well, first of all, if you have access to my Elliott Wave indicators, then it's much easier to understand the flow of price, as you can see. Right, we got blue candles, blue SWAT candles above the long-term moving averages, above 21 EMA. Well, in that case, as you can see, it's very appealing and very, good profitable trades can be found to the upside, right? As you can see. Now, not always, of course, is a trend that visible, that aligned, that strong. Of course, this is a great example, recent example of such a move up, and most of these buys would work well. Of course, the stop loss is important as well, but you can see there's much more potential to the upside than to the downside when doing any kind of intraday or interweek or even swing trading, because obviously price has moved up a lot more, and obviously there was a strong uptrend. So you can see that using these moving averages, the SWAT candles, the SWAT fractals, as you can see price breaking through these fractals for upside, all of them indicating upside, and would have been pretty good with upside in general, as you can see. Now, in my SWAT course, I explain specific strategies, how to enter, where to enter. I can't reveal those here, but from a SWAT perspective and from a wave perspective, there was plenty of opportunity to trade to the upside at this moment. But let's take a look at some examples, some discretionary examples. We can see, of course, basically price breaking above the 20 EMA for the second time here, right? So a break above this fractal, for instance, would confirm the continuation higher. We had 1, 2 breaks below the 20 EMA without going below the 144 EMA. We had a 1, 2 second break above the 21 EMA. So it's likely that this is some type of ABC correction that is respecting the 144 EMA zone. So when it breaks out for the second time here above the 20 EMA, specifically if it breaks as fractal, that could be a way of trading that continuation higher and trading a potential wave 3 to the upside. So that's one way, this fractal break as it breaks the second time. Very interesting way of trading. Another way could be, for instance, this bounce here at the 21 EMA. We have a break, a pullback, and a bounce. Also here, these candlestick, these bullish candlesticks basically could be ways of trading the pullback at the 21 EMA. We could even look for trading ideas as prices, basically as the HMA is pulled over the 21 EMA, and we have bullish candles and we have price breaking above the fractal. We can look on lower time frames for flags and breakouts on the 1 hour chart here, and potentially let's see, here and here. We can use, of course, multiple time frame analysis as well to kind of scale in trades as price is breaking and riding this 20 EMA for further trades to the upside. So when you get an impulse, when you get in a strong push like that, of course, lower time frames are available to scale in and kind of position maybe more trades into that direction, as we get more and more evidence that this is starting to become a bigger impulse to the upside. We can use fibs, of course, as well. If we'll dive into lower time frames in just a second, let's say we can use a fib from here to here. If this is a wave 3, then we would expect the shallow fibs to be respected, like the 38 or 50 or 23.6 fib. As you can see, the 50 fib was respected, and that was a bouncing spot for upside, going nicely to these targets, reaching all the way to the minus 100 target here at 121.70. So that could be one way of trading as well. Let's see, we have a fractal break here with this candle, with a very strong candle. So that could be one more reason for looking at lower time frames and scaling in a potential trade there as well. We'll dive into that later on. And in my Euro Dollar Pound Dollar video analysis earlier today, I said that very likely to see a bounce here at either at 121 or 120.50. And that's what we got here, a bounce as well. So it could have been another reason to look at lower time frames to see if we can get a bounce, because this looks like, of course, the strong push, the price action riding strongly above the 20 EMA like this is typical for wave 3. So waves 4 are typically shallow. So after a strong surge like that, we would expect price to make a bounce at shallow fibs. Therefore, a reaction at this level after such a strong push-up, very logical as well at the 20 EMA zone, at the bottom of the 20 EMA zone, and that's what it did as well. So all of that is explained in my course, but you can see that these were some very logical trades on the 4-hour chart. This breakout, this bounce, this bounce, this bounce, and on lower time frames we had maybe even potentially at these red lines even more setup. So your dollar was a great example of some potential trade with the trend trade ideas here, riding the 20 EMA zone, breaking the fractals, trading at the fibs for upside here. I think was a great examples of the last week. And yeah, we can use that as an example. Now, whether what is the exact wave count, whether this is a wave 1 and 2 and 3 or an A, B, and C up, for these trades to the upside really didn't matter all too much because of the fact that in both cases we expected upside. So as you can see that the Elliott Wave theory kind of helped us maybe a little bit here, but wasn't crucial, I think, for these trading ideas, just because we could see the price swings develop by using moving averages, fibs, and fractals, and just use that as a shortcut to understand that the upside had the advantage here. Okay, and if of course we look at the bigger picture, we did expect upside also because we saw an ABC completed, and we saw a push up and a correction. So one more leg up. Whether it was a wave C or 3 was just very likely at that point. Specifically, when price was breaking here again above the resistance zone here, because otherwise, of course, if it would have broken below this support trend line, there could have been a deeper push as well, maybe making a bigger A, B, C correction like that. So this was a critical break for upside, confirming that uptrend. So those were some. Let's take a look at lower time frames to take a look at some of those trading ideas here. So here we had the break. So yeah, another, there are a lot of tools in my SWAT course that I explain that are available for trading. For instance, this blue candle right here with the blue arrow and the blue MACD diamond, that's a valid setup on the lower time frame. Moved up 40 pips from there, or let's see if we had here another break above the 20 EMA after a pullback. Another way of trading to the upside, even bigger push up. Looks like about 70 pips up on the 1 hour chart. Here another pullback and another blue breakout above the 20 EMA. Another great push up, as you can see, even bigger. I think this was maybe almost 200 pips up from this point. And then we had another 4-hour confirmation here with this red line. Here we see momentum as well kick in. Here we see momentum diamonds. Here we see momentum diamonds. So yeah, no blue candles, but we did have a blue MACD diamond and blue arrow. So also here we could have had setups from this point or from this point, and still a good 100 pips, I think, or even more to the upside. Okay. Now earlier today, I mentioned the fact in my video that there was likely to make a downside. Oh, 1 second, folks. The doorbell just went. All right, sorry folks for that. Yeah, so here this was different because if you compare this red part here on the left, then we had a break above it with the blue candles, whereas here we didn't have. We had gray and then a red candle, so at that point a deeper correction down to the 143 EMA zone was likely, and that's what happened. But we got a bounce because the trend was so strong, of course, that was not surprising. But this correction, this deeper retracement here, three-wave down, was also not surprising because, yeah, we had, of course, the divergence building up in this leg up here. Some hidden or some divergence, not even proper divergence, but that's why some kind of retracement was likely indeed. But also likely that the uptrend continued because ultimately this trend is just very strong. This momentum is very strong. And now we're seeing again a break pullback continuation probably for upside. So yeah, all that was likely. The correction down and the bounce up all made sense in my view, considering the strong uptrend. So you can see here these red lines signaling all great potential, not this one, all great potential 1 hour trades there and 4 hour trades as well within that uptrend. Beautiful stuff. Now maybe on a 50-minute chart, let's take a look as well. You can see the break of these fractals, some upside. I would definitely trail the 20 EMA here, small win there. 50-minute chart. Look at that, we had another scale in here, blue diamond and blue candle, or the break of these fractals for upside. Two ways of trading that on the 50-minute chart. And more trades here with these blue candles, or the break of the fractals here. Again, two ways of trading that on the 50-minute chart. Same thing here, blue candles, the break of fractals. All great stuff after the 1 hour chart. So there were multiple scale-ins on 1 hour, 50-minute available, as you can see. Specifically, of course, if it's trending like this, obviously you have more options and more choices. And I would suspect even on the 5-minute chart, they get fractals and breakouts available. But yeah, you want to time those, of course, at the right spots. 5-minute chart, of course, you're going to have a lot of breakouts, and not most of them are not good, or not, maybe, yeah, many of them are not going to go that far. So you got to be careful not to overtrade on the 5-minute chart, not to jump, I think, in too many trades. That's my view, at least. Got to be careful and you know, look at the bigger picture. But sometimes there are good 5-minute trades. If I think, you know, specifically if everything's aligned on the higher time frames, there could be good entries there. Just, you know, in my view, I always want to be careful not to overtrade on the 5-minute chart, because there are more breakouts many breakouts that don't necessarily go that far. So, you know, be careful of that in my view. But yeah, so those are some good trades. Now, right here, right now, like, I would be a little bit careful with the upside because we're at Wiz 7, and there could be a bigger correction as well at this point. I think there could be a bigger ABC down to the 38.2 fib, so I would not trade longs here, just because the momentum was strong, of course, in this push-up, but this could be a consolidation phase, and this could easily be a wave B. And of course, we want to avoid trading longs right at the start of wave Bs, because that could be easily a push lower. So I wouldn't trade it here. I would trade it though if there is some kind of flag pattern, of course, like this, or triangle, or if there's a smaller flag here, I would trade the break, but not right here, because it could easily make a consolidation first, or go deeper to 38.2 fib. So if it does break below the 20 MA, there is a good chance it could fall further down, actually, in this case. So I don't think it's a good long spot right here. It made sense to go for long, maybe somewhere around here at 120.80, right? Maybe on a 5-minute chart. Actually, when it started to break above the 20 MA on the 5-minute chart, right? It was making a bear flag here on the 5-minute chart, but then broke that flag to the upside. So when we had a blue candle, and the consolidation, looking for a long here for push up made sense. Now, not so much. I think it's a little bit risky due to the fact that this could be a bigger, this push up could be part of a wave B, and down it goes for C. Okay, but here this right, when it broke above the 20 MA, still made sense for upside, as it could have been a wave C of B, for instance. Now, these waves are not that important. More important is just the fact that when you look at the structure of the market, we were in a big push up, and it's making a bounce basically at with 7 for the third time. It could easily just make a retracement back to the long-term moving average zone because it hasn't hit that long-term moving average zone. You see, it was very close to it, but didn't fully hit it. So I think that it is definitely possible that it can make some kind of flag, triangle, or go to the 38. Whether you use wave analysis or not, or just whether you use moving average analysis, it seems very likely. If you use fibs, fractals, moving averages, I think that and patterns, I think that just the probability is quite visible in my view, or quite a decent chance. So let me see if there are any questions. Nothing yet. Okay, feel free to reach out, of course, if you have any questions. So yeah, using SWAT materials like SWAT diamonds, momentum diamonds, SWAT arrows, SWAT candles, SWAT fractals, the moving averages, the oscillators, I think makes it easier to translate or to get trade setups and trading ideas that at the right moments. But of course, I guess that's just how I see it. I think I provided some great examples here, but they're just a few examples, of course, right? Now, it doesn't mean that's impossible to not trade without them, of course. I just think it makes it easier to do so. But maybe that's logical, right? So you can see here how Wiz helped as well identify one of the major targets. So let's see if we can find some more examples maybe. Let's see. Let's use the Wiz tool to give a little bit of a historical context. All right. Yeah, so here we see, for instance, here we see price break the 20 MA for the second time. So that could indicate a push lower to the 144 MA. That was a retracement trade. We see a bounce at the 144 20 MA, but the bounce doesn't go all too far. And as price breaks below the 20 MA again, we can say, okay, this is maybe a bigger ABC pattern, for instance, or a 1, 2, 3. So these red candles here, second, third time, make it more likely that this is going to break to the downside and break this descending wedge lower and break below that 144, 233 long-term moving average zone. And that's what we get. So any of these red candles or break below these fractals could make sense for a trade to the downside. So here, for instance, the second break specifically, and the third break, and the break of the fractals, all of these red, vertical lines, potential trade ideas. Then we get a strong push up. You see the pink diamonds coming in, indicating momentum. So when momentum is visible and we see a pullback into 20 MA, then typically there's a good continuation after the pullback is finished. That means the break of these fractals or the red arrow here. Another potential to trade ideas for downside. We see again momentum kick in. So one more follow through possible as well right there on this downside. Now, eventually price is running out of steam, specifically with this downside, so we want to manage those trades because, of course, a bigger retracement could take place. And that's what happened. We kind of build a little bit of a falling wedge here, which is a reversal chart pattern, of course. So that's when you want to close those short setups, take the profit, and as it breaks above the 20 MA here, potential even to trade to the upside here to the long-term moving averages. That counter trend trade works out well. Price goes up into this zone, and there's a bounce here. Now, if we look at the bigger picture at that point, we can see probably a 1-2 here, a wave 1-2-3 pattern. So we wouldn't be surprised if this is a wave 4. So we can put a fib from here to here, and we'd expect price to bounce at the 38 or 50 fib. It bounced at the 61, but didn't invalidate the wave 4 because price didn't go below the territory of this bottom. And we get a lower low, end of wave 5, and then a reversal back up. So that was a short wave 5, but difficult to trade wave 5. If we trade it early here, we might get a small piece. If we wait too long, the bottom already broke and it's too late to trade it. Or if we traded at the fibs, then we could have had to enter the 38 or 50 fib and probably catch some profit. I mean, it didn't hit really the target that I had in mind at that time, minus 273 target, so probably would need to manage that trade here. And then we got some upside, as you can see, with the breaks above the 21 MA, the blue candles indicating a reversal, and the breaks of the fractals, and here once more for upside. Bigger ABC correction. So yeah, these red candles make it a lot easier to, the SWAT template and indicators make it a lot easier to spot those trades. Here again, blue candles for upside, blue candles for upside. But that said, I mean, you want to take all these blue and red candles, of course. I always use the logic of the higher time frames and the lower time frames to filter out those trades that makes the most sense. Because, for instance, in this case here, we had 5 waves up between these red lines. Then we had a correction lower, but I was already thinking that there could be some bigger ABC patterns. So this upside, is something you want to be careful of, that it could still run into some correction. And that's what it did, as you can see, before the trend was finally settled. So this zone here, very risky for long still, because of the fact that the price was still making this consolidation. So despite the fact that there are blue candles visible there, having that extra kind of experience and knowledge to know that this is a bit difficult zone and we're waiting for that consolidation to finish and complete would certainly help avoid some of these messy trades here, right? So knowing when to trade and when to trade helps by saying, okay, these are good downside trades. Here are some good upside trades. Maybe here's some good downside. This is maybe a zone you want to skip, and here's some good upside trades again. So Bitcoin, USD, I mean, well, that's a very big trend, of course, so maybe it's too easy to look at this pair, but obviously we had some great setups here too in the recent history with here a push above the 20 MA, flag and break above, bounce at the 20 MA, break above the fractals for a strong continuation. Again, break of these fractals for a strong continuation, break of these fractals for a strong continuation. So when there's a strong trend, of course, some great stuff can take place. But even in a range, now, this is a tricky environment. Pound dollar had a big range. So this is one of those charts where you can get into trouble if there is a range taking place. Specifically, here you can see a range. So, if you're waiting for the 21 AM break here, you could be trading halfway to range. That might be a little bit tricky, right? And reasons for good reasons to manage the trade. Most of the cases the price did move up, it just didn't go as far. So active trade management would have helped here. ABC correction, a lot of choppiness here. So stop losses as well below the actual bottom, rather than using stop losses too close, could help avoid getting whipsawed here. But yeah, as expected in my Your Dollar video as well, a bounce here and a break here. Still good for a very smooth push up. And the bigger bounce here to the downside also taking place after price hitting 135. So this would have been a good counter trend trade. Now price is moving up quite fast, faster than I imagined. I thought 133.30 would be a bouncing spot, but it's breaking above that. So yeah, in this case, long setups normally would have done pretty well because overall the trend was up. But of course, price was quite choppy and corrective. So active trade management, looser stop loss would have helped. Still trying to find the trades with the better odds. So here I think would have been a good long, as I mentioned. Let's see. I think here I would, if I remember correctly, I was not looking for long setups in this zone because I thought that it looked bearish due to the break of this trend line. Okay, well, so I would have avoided that zone myself. This looked bearish because of the break A, B, C here. So I think that some downside could have been logical at that point for reversal, some reversal trade or retracement trade maybe. And let me put the Wiz tool on. Oh. And let's take a look. Now, the 4-hour chart, yeah, I think 1-hour chart, of course, is also a tricky chart, and I think is best used only when after, I think, personally, seeing something clearly on the 4-hour chart. Because 1-hour chart could be just a chart that, if you focus on it too much, I think brings you into trouble. So by focusing on the 4-hour chart, I think you kind of find the spots where the 1-hour chart and the 50-minute chart have the most potential. That's my view, at least. So here, for instance, we saw a clear break below 20 MA, good reversal, pullback continuation here for downside, reversal setup. Then we get into consolidation, and I think that we need price to clearly break above that. So this could have been a good long here as well. Here or here, second or third break. Then here again. After the break, pullback continuation. Plus here, sorry. Again, pullback and continuation above the 20 MA. And here in the ascending wedge pattern, basically, like that. And I think here, after we had a decent pullback, and maybe even here, actually, here we also had a pullback red candle. So yeah, I think that these are good 4-hour moments. So if we see good 4-hour moments, it could also still make sense to add eventually on the 1-hour chart at those spots as well. Certainly a choppier chart, but if we pick the moments where we have a second break or a decent momentum, like for instance here, decent momentum pullback continuation, or we have a breakout with a candle, or we have a break pullback and continuation, all of those are good moments, I think, give us an edge, I think, in the long run to trade on this 4-hour chart. And I think those are good moments for 1-hour charts as well in that case. And you can see how the blue candles, the blue arrows, blue diamonds, the break above the fractals, and the moving averages all help kind of estimate those moments, give us indicate the moments where I think that the odds are on our side. So yeah, so you can see that trading waves is maybe not as complicated as it seems if you use, I think, these indicators. I think it helps simplify those decisions, helps simplify the patterns, kind of keeps my brain focused on the opportunities, where there is an edge, and on the right side. So I hope that this video has helped you see that too. So feel free to join our SWAT member. But even if not, of course, maybe you can still use some of this logic just like that, like these moving averages and fractals. If you don't want to become a SWAT member, those are still good things that you can add on your own. They are available, of course, on any MT4 platform. But you can also, of course, become a member of SWAT and learn all of that too. Once again, check out our special offer, sponsorship from OneFX, okay? That is offering you a special sponsorship if you sign up with them. And we'll be looking forward to the next wave. Maybe we can talk a little bit more about trade management in the next live Elliott Wave webinar. In any case, we shall create trading and see you soon. Cheers, bye-bye.